expectations are high that Ben Bernanke will attempt to energize the U.S. economy through a third round of monetary stimulus. America's jobless rate has remained above 8% for the last 3 years, while the country's housing market continues to remain depressed. In addition to any possible policy moves, the U.S. Fed will also release updated projections for economic growth, unemployment and inflation. Chairman Ben Bernanke will also address a press conference later in the night. There is news that's just beginning to come in. U.S. Fed has kept refinance rates unchanged. It will buy $40 billion MBS. So that's breaking news that's coming in right now on your channels. Ben Bernanke has finally decided to buy 40. U.S. Fed has kept refinance rates unchanged at 0.0% to 0.25%. Beginning to trickle in news from the United States, and we'll continue to get you analysts and experts on that news. He will buy 40 billion MBS monthly, continue Operation Twist. Those are details that are coming in from Ben Bernanke. We've got Beth Ann Bovino, the Deputy Chief Economist of Standard & Poor's, on the line from New York for greater perspective on what has really happened. Beth, good to have you on the show. There is no time limit for MBS to end. He has announced a QE-3 will add to purchases if labor market conditions does not increase. The Fed will buy $40 billion MBS monthly and will continue with Operation Twist. They have kept interest rates unchanged at 0.25 percentage point and has extended zero rate policy to 2015 now. FOMC has extended rate guidance to mid-2015, like we just told you. What are your first reactions? What do you make of them?
Well, I expected the Fed to extend the how long they're going to keep interest rates exceptionally low out to late 2015. So that seems to be in line. In terms of quantitative easing, I did not expect earlier. I did not expect them to move until after I heard Chairman Bernanke speak at the Jackson Hole meeting, where he was very going on about the lauds of QE-3, so that made it 50-50. I think that markets will probably like some of the moves they did. It seems like they were even a little bit more creative than just coming up with a few $100 billion to extend QE-3.
But there are concerns that largely remain in the U.S. economy, and some of those concerns are a very tepid rate of growth at 1.7% for the second quarter, or unemployment, which continues to hover over 8%. Will this be a long-term solution, and will this really be able to fix the U.S. economy?
Well, I think the Fed has said earlier, had written a report on the fact that quantitative easing, additional moves of quantitative easing, has diminishing returns. They're very aware about that. They wrote about it. So I would take their action on new QE3 as more of an insurance policy, but I don't think it's going to be anything that's going to really drive this recovery back upward.
Q1 and Q2 were really announced when markets were in a very bad position. That's not really the case, and you are right to point out that markets will perhaps take some sort of a breather from QE3. How much of a breather will that really be? Do you really expect this to fuel a rally of sorts on Wall Street, at least in the short term?
Well, I think a lot of it might have been priced in already. A lot of expectations for another round of quantitative easing had been there. The question wasn't whether, if, it was more the question of when. A lot of people, including me, had thought they were going to wait a little bit and probably move out later in the year. So I think though, because it was somewhat priced into the market, I don't know if it's going to have a major impact on markets today. It did look like it did make a little bit of a bounce in the S&P 500, but it doesn't look like it really pushed it up too high.